Welcome to StockMarketFunding.com, SMF Street. What we would like to talk about is something you don't like, probably. Fannie Mae reports a net loss of $1.2 billion or 55 cents per share. Now, there's going to be a lot to this report. And it's a thing that it's the credit losses. Look at its credit losses for 2009 and 10 on single family loans. Okay, that's a very big one. And right here through 2005 and 8. Housing forecast is another big deal. Providing liquidity during the first half, right here is important, of 2010, they purchased or guaranteed an estimated $420 billion in loans. Wow. And how many people are going to go delinquent on them, and how much has a taxpayer already picked up? Not to mention that Mr. Bernanke is not in charge of monetizing debt, nor is the Treasury Department. And what I have to say about this whole report here is that the taxpayers stuck the money. They're buying up these bad mortgages. They're not doing things the right way. They need to fail. And the thing about it is, and start over. Look, $423 billion in loans, okay? And the thing about it is, they have not written down anything. I mean, overall book of business decreased by more than $7 billion in the beginning of 08. And the thing about it is when you look right up here, Fannie Mae reports a net loss of that's 55 cents per share compared to a net loss of $11.5 billion or $2.29 a share in Q1 credit cost decline. Well, you know what? Credit cost decline, there's a lot more to this. I just wanted to point it out so that when you're viewing it on the website, at least you have the content that we have, and you can see that they're trying to say that their net fair value gains were $303 million in the second quarter compared to losses of $1.7 billion in the first quarter of 2010. Well, let me tell you what happens in 2011. All the stimulants at the government, that's all coming off. And those stimulants are going to be coming off, and all of the write-downs that have not been resolved in this name, and what a Ponzi scheme this all was. And so once again, there's a lot more to the report. We'll be doing a special report on it so that we can break this down more, because we can only do so much on this video. We'll be breaking it down on one of our radio shows.